Why should you start investing now, even if you don't have that much money? Why is it important to start with small amounts? Well, for one, I like to learn with small losses. I don't want to make a huge mistake when I have a large sum of money. And you can do this even without using your own money. They have something called paper trading. I like Thinkorswim, that's a good program. So you could switch it over. You don't have to have money in the account, and you could just trade stocks or whatever. Now, recognize that investing and trading are two separate things. Trading is where you're entering and exits of stock and positions, very frequently. I prefer investing rather than trading. Trading is a little riskier. In fact, over 90% of actively traded funds do not beat the S&P 500 over a 10 or 20 year period. So knowing that over 90% of people that try are not even going to do as well as someone that just buys and holds, I buy and hold. Thinkorswim's now through Charles Schwab. It used to be through TD Ameritrade. And then Fidelity has something similar. Other platforms might have something else. This is the one that I use. They're not paying me in any way at the moment, but that's something that I've used in the past. One of the things you want to do is get comfortable, and you want to get comfortable with market swings. And I'm not talking about it's up this week, it's down this week. I'm talking like it's down for 2 years, and then it's up for 5 years, then it's down for a year, then it's up. You got to get used to that. And for me, paper trading doesn't do that because you don't have any skin in the game. But if you have some money, even if it's small sums, you get used to seeing it going up and down. And over time goes up, at least historically, and you can help reduce your emotions, because most people that lose money in stocks and bonds and mutual funds and things like that, it's usually because of their emotions. They're putting money in there that shouldn't be in there. If you need the money in the next 5 years, it shouldn't be in the stock market. It should be in CDs or fixed rate bonds or things like that, because the stock market can go up and down, and it may take 5 to 10 years to recover. So if you need that money, don't put it in the stocks. But money that you don't need for the next 10 years or so, that's where I put money in stocks. The other big reason that you want to start with small sums of money, effectively, you get analysis paralysis. When you get a lot of money, you're like, oh no, should I buy today? Should I not buy today? What should I do? You have no experience with the market. Let's say for whatever reason you have $500,000, you put it in the stock market, and the very next day it loses 2%. Well, 2% of $500,000 is $10,000. How are you going to feel if you lost $10,000? Now, if you put $100 in the stock market and lost 2% the first day that you invested, you lost $2. So it's not life-changing. So then you get used to the ups and downs, and you don't get as emotional when you see dips, and you start building confidence because, hey, I've seen this happen a year ago, 2 years ago, it recovered, it's fine. You get more comfortable with that risk. The big one for me, time is an asset. Don't waste it. You'll never get the time back. So do it today. What I mean by that is, so if I had $100 a month and I set that aside for just 1 year, so I have $1,200 at the end of the year, and I put that aside, I invest it in the, say, S&P 500, which has returned 10.7% average return per year for the last 30 years. Remember that past performance will not be a guarantee of future performance. All investments carry risk and can lose value. Now, if I had that for, say, 40 years, and it continued at that same rate of return, that $1,200 would become $70,000 40 years in the future. If someone took $100 a month and at that 10.7% and invested it for 40 years with that same rate of return, that $100 a month actually comes out to $674,000. So this is how even like $100 a month or $25 a week, basically skipping going out to eat or working an extra hour or two at work, you could easily come up with this. Another example might be, somebody that smokes. If they gave up smoking a pack a day at $10 a pack effectively is $300 a month. So someone that smokes is 3 times this or 3 times that. So over 40 years of smoking, you have about $2.1 million worth of cash when they retire if they just didn't smoke and put the money towards investments. Or $100 a month, another idea would be, if you don't really need cable, you cut your cable bill, that might save you $70 to $100 a month. There's a whole bunch of different ways to come up with something as low as $100 a month. Also, reducing alcohol consumption, sugary drinks, all of these things, reduction of these items would be actually good for you health-wise, but also financially. So how do you invest in the S&P 500? A couple of examples of things that you can invest in for the S&P 500. These are all basically the same thing. So SPY is an ETF, VOO is an ETF, FXAIX is a mutual fund, and SWPPX is Charles Schwab's version of that. This you can actually start with $1 invested. So if you have very small amounts of money, that's great. If you want to buy SPY, you need to have about $520 currently to get one share of SPY. The thing you really want to do is create the habit. So if you create the habit and stay consistent, say you're doing $100 per month, every month, you're also dollar cost averaging. I have a video on that as well. Basically, you take the thought out of it, you take the emotion out of it. You don't want to make this your life of just always worrying about stocks. You want to try to automate it as much as possible. And the other thing you want to think about is every time you get a pay raise, you want to increase that amount. So say I get a 5% pay raise, then I would say make this $105 or something like that. Take some portion of that raise and put it towards the investment. You also want to take advantage of tax advantaged accounts. What I mean by this are individual retirement agreements, or some people will say individual retirement accounts, IRAs. You have 401ks through employers, or you might have a 403b, which is effectively working for a nonprofit. The 401k and the 403b, that's going to be through an employer, but the individual retirement agreements or accounts are open with a brokerage account, and you can open these with, I would say, Fidelity or Charles Schwab. I mean, these are both good names. Again, I'm not affiliated with any of these. I've seen good things with those. There's other ones as well. I think Interactive Brokers and a whole bunch of other brokerages. I tend to like these two more. Basically, I don't like to pay trading fees, and I like to deal in options trading when I want to take a little bit more risk. Depending on your tax rate now and what you think your tax rate will be in the future, you can either use traditional or Roth accounts. A Roth account, basically, I make contributions today after taxes, but the money that grows in a Roth account, I never get taxed on when I withdraw in the future when I'm 59 and a half years of age. I also have the ability to pull out the funds for adoption fees as well as buying a primary home, up to $10,000 for the house. And I can also withdraw the principal after 5 years, and that would be without tax or penalties. With a traditional retirement account, any one of these, I don't pay taxes today, but then I'll have to pay taxes on the money when I do withdraw it. I'll keep some in both of those because I'm always going to have some amount of money that I'm not going to have to pay taxes on when I withdraw it, just because of standard deductions. So I have other videos on the different accounts and how they're used. If you found this content useful, please subscribe. I teach a lot about financial education. I want you to be able to make more money, learn how to invest, how to save money, especially on taxes and things of that sort. If you have any topics that you would like to see discussed, please put them in the comments below, and I'll get to them as soon as I can. Thank you for watching and have a great day.